هذا البرنامج برعاية فينيكس جروب UAE.
Hello, crypto investors, and welcome to your trusted source for the latest news and insights driving the crypto world. I'm Henri Arslanian, and this is Crypto Weekly, where we break down the headlines, unpack the trends, and bring you the stories shaping the future of digital assets. Let's start with the headlines today. There's been developments with the banks on crypto, from JP Morgan to BBVA. We're going to have interviews today on crypto banking, crypto investments, and very important, on crypto insurance. And we'll have an educational segment on what is driving the incredible growth of stablecoins. All these topics and much more coming up in today's episode of Crypto Weekly. But let's start first with the news. Well, let's start with the news, where JP Morgan announced the launch of a deposit token, the JPMD. The JPMD will enable JP Morgan's institutional clients to move money 24/7 on-chain. This is an interesting development. First of all, there are a couple major differences to understand. The JPMD is a deposit token and not a stable token. Stable coins or stable tokens are backed one-to-one by US dollars or other cash equivalents or US dollar equivalents, including treasuries. When it comes to a deposit token, this is basically commercial bank money that is backed to a certain extent from anywhere from 10 to 20% and is subject to the liquidity and risk requirements of the bank. I think this is something we should expect many other banks to follow, and we should also expect a debate within the crypto and the digital assets ecosystems on whether customers prefer stablecoins or deposit tokens. It's very likely banks will prefer deposit tokens, but many in the crypto ecosystem will prefer stable coins. One thing is for sure, we're not done with this debate, and we should expect more activity on this topic over the next couple of weeks and months. And the U.S. Senate passed the Genius Act to regulate stablecoins. This is an important milestone in the future of the basically financial ecosystem in the U.S. and globally as well. A couple of important things to watch right now. First of all, there's really going to be more interest and investments in the stablecoin ecosystem in the U.S. The success of the Circle IPO is a very good example of the interest that we're seeing in stablecoins. Second, we should expect to see many financial institutions also enter the space. For example, when it comes to the Genius Act, it stipulates that stablecoins can be considered as cash or cash equivalent when it comes to the banking sector, and can also be used as margin for any financial instruments. This is why pretty much we're going to see all the U.S. financial institutions explore stablecoins, and this means not only knowing how to handle them, but also satisfying all compliance requirements linked to these stablecoins as well. Another interesting point is that yield-bearing stablecoins are not allowed. When it comes to yield-bearing stablecoins, these could be a threat to some of the smaller banks, community banks, or even regional banks. And this is one of the reasons that from a policy perspective, a lot of the Genius Act forbids stablecoins to offer yield. One thing is for sure, there's a lot of discussions on stablecoins, and there's going to be a lot more coming up over the next couple of months. And finally, BBVA recommends to its private banking clients to invest 3 to 7% of their portfolio in crypto. This news is sparking considerable discussion within the private banking sector. First of all, it's important to understand that BBVA is not the only one. Other financial institutions have also recommended to their clients to buy Bitcoin. BlackRock is one of them, for example, that recommends clients buy up to 2% of their portfolio in Bitcoin. But it's important to understand that it's going to take some time before other private banks come in and encourage clients to buy Bitcoin. And there's obvious reasons for this. One of them is that private banks did not have, until recently, ways to make money with these Bitcoin recommendations. For example, if a private bank recommended to a client to put 2% of their portfolio in Bitcoin, but they had no way to custody that Bitcoin, or they were not allowed to offer the ETF or crypto funds, literally that 2% was going to leave the private bank's asset and go outside. This is a problem considering that private banks make their money with basically charging a fee for assets under management and for advisory, custody, and execution fees. Now that private banks can offer the ETF, but also potentially custody Bitcoin and offer funds, we should expect to see more private banks over the next couple of months encourage clients to shift a small percentage of their assets to Bitcoin and digital assets. So definitely a sector to follow. We often talk on the show about the intersection of traditional financial institutions and crypto. And now we're going to talk about how these two worlds are coming together. And we're joined in studio by Michael Chan, the CEO of Zand Bank. So Michael, over the last couple of months and years in the crypto space, it's always been difficult for banks to enter the crypto space. Do you believe this is starting to change, with all the regulatory changes going on and the industry evolving?
Oh, absolutely. I mean, that's happening not only in the UAE, the whole GCC region, and also in the Western world as well. So since the US Trump administration, and you can see many banks start opening up. And we need to understand as well that what's the dynamic behind that, because in the very beginning of the crypto world, it's talk about only crypto tradings, and right now we're talking about many use cases of the crypto, including stablecoins.
So actually, on that particular point, I mean, how do you see the future of banking for a bank like Zand, for example? Especially you mentioned stable coins. Do you believe stable coins will be used more widely, especially with what we're seeing in the US now with the Genius Act? Do you believe this will really become a global phenomenon of the usage of stable coins in banks?
Well, absolutely. I believe actually stablecoin has many use cases. I mean, that's including, from the supply chain financing, cross-border pay files, and also talking about the remittance business as well, right? So this use case actually has to be, have an infrastructure to be ready. Now, banking actually is no longer actually doing the thing alone. They try to leverage also the fintech and also the crypto blockchain to make it happen.
But to what extent, Michael, when we look at banking in general, right? So historically, we always had an issue with banks and correspondent banks, for example, in the US, where a lot of the US banks didn't want to deal with any bank globally that was dealing with crypto. Do you believe some of these changes going on with the Genius Act in the US and others, other pieces of legislation and the change of administration will change the risk appetite of correspondent banks to deal with banks globally that they're touching crypto?
Absolutely. I think there are a few things I was saying is happens. So number one, actually, the adoption for the banks in the US itself, because of the regulation changes, and then more banks actually adopt on this, and for institution use and not only for the retail. Second thing is that I think because of the popularity of the stable coins, we need to understand that in the crypto trading world, usually the liquidity is come from, for example, like the Bitcoin cross again, the USDT, USDC. Now, because of the adoption actually for the different markets, when you have the local currency stablecoin cross again actually on this, it can be the liquid pair. So I think that will game changes.
But to what extent do you believe the U.S. banks could also get involved in the stablecoin ecosystem? For example, now, any bank that is trading with crypto, let's say, or globally, has a benefit because a lot of these U.S. banks are not involved in it. When it comes to, let's say, the U.S. dollar stablecoin and becomes regulated, do you believe the U.S. banks will play a bigger role in this space as well?
I think majority right now, the participant in the crypto is quite spread around the different regions. US is one of those, actually one of the largest, but China as well, and also the Asia, right? Especially on the South Korea and also the Japan. The dominant currency for the local currency always the local currencies. Today, I think the debtor, they're doing very well, job 140 billions, but also bring the risk to the US Treasury system. But that's reflect actually the needs from the government to buy more from the foreigners in terms of the local treasury. So I guess actually the appetite for the bank will change because of the appetite from the government chain as well.
Yeah, so this brings up the whole topic of actually real-world assets and yield-bearing assets. To what extent do you believe we will see the usage of real yield-bearing assets within the banking ecosystem when it comes to like RWA products?
I think in the region, we talk about a few asset classes which is quite common to tokenize. So first one is the properties. The second one is the gold. The third one I think is coming is the debt markets. In terms of debt market, it's quite easy to share the yield. Money market fund is quite easy to share the yield. But I think quite interesting can be like the gold, for example, right? So let's say you park the gold in the custodian, actually it will not generate any interest. But if you tokenize the gold, can be a collateral pledged by someone else as a instruments that share the yield.
Yeah, but that really unlocks a whole like billions of dollars of actually collateral that can be used and put to use. Talk about the crypto and yield. I mean, obviously, Zand Bank recently got its VARA license here in Dubai. Can you share with us like what is the vision of Zand when it comes, especially with regards to this VARA license that you guys have received?
Well, Zand actually is not really a digital retail bank. Zand actually focuses on the corporate, fintech, and digital assets. On the digital asset space, actually, we have a quite strong belief that some bank actually has to stand up and then to bridge between the TradeFi and the DeFi. I think so far actually we have a good blessing from the BARA, and because of the visionary leaders, I mean they set the ground that the UAE has to be actually one of the leading crypto hub. On the other hand, one of the leading on the innovations. To push it forward to the digital economy, and you need the bank to be the one enable this kind of bridge between the TradeFi and also the crypto. So we are the one, actually we are the first one probably, and then we are right now is the leading one as well. So I think this will enable a lot of global players, regional players come to UAE. So
do you think the other banks will follow as well, getting their VAR licenses and crypto licenses?
Well, absolutely, but I think that linked to the pain point as well. That the first thing we have to solve is a U.S. dollar clearing, right? Today, actually, liquidity mainly cross again the U.S. dollars, but on the day, actually, adoption is more cross again the local currencies, which is the local stable coins, that will actually, game changing against, to the local markets.
When on that point, when we talk a lot in the crypto industry, many believe that pretty much all the banks in the UAE will launch stable coins. Do you believe that's something that we may see, like with the banks locally launching stable coins over the next 1 or 2 years?
I guess actually that will be replayed again actually back to many years ago in the US. If you remember, there are a few hundred stable coins, right? Yeah. So at the end game actually is that, what are the use case you're having, right? Yeah. And then what are the risk appetite for the bank? And then what exactly actually you want to achieve, right? JP Morgan, for example, doing very good job like Canada's, because they have the buy side, sell side, the whole ecosystem end to end. I think they are kind of success. I think most of the bank actually may not necessarily go to the public change. They may go for a closed loop, and then in order to capture actual trade finance. Again, it's very linked to the risk appetite. I mean, if your risk appetite is high and you have a risk control goods, and then you can enter the crypto space.
Yeah, especially in trade finance, there's so much need for using blockchain. I mean, the paperwork on there is quite crazy. Talking about optimization, actually, what's your view on the usage of AI in banks? How does Zand look at the developments in AI from either cost optimization or other use cases within the bank?
Yeah, so we start actually the AI journey back to almost like 1.5 years ago. Right now we have already the AI team, and then we try to cross again the AI with a different use case like blockchain, for example. One of the use cases we're using is that we're using AI to do transaction monitoring. That's helped a lot, right? And then we probably will have some payment solution launched very soon in the market, and the fraud detection will very heavily rely on the AI as well.
Yeah. I mean, that's a good area where we need AI to play a role. Maybe last question, Mick, to you is really from a CEO of a bank, right? There's obviously tons of risk in the crypto ecosystem and in banking. What is on a personal level the one risk that keeps you up at night that you're really focused on, that you think we should keep an eye on?
No downtime.
That's a 24/7 market of crypto, huh?
Absolutely.
That's why it doesn't work well. Good. Thank you very much, Michael Chan, for being with us. That was Michael Chan, the CEO of Zand Bank, talking about how actually the traditional banks like Zand are coming into the world of crypto. Thank you very much, Michael, for being with us today.
Thank you, Henry. Thanks.
Excellent. Now we're going to go on break, and we'll be back to talk about another very exciting interview about the developments going on in the crypto space. Stay tuned.
هذا البرنامج برعاية فينيكس جروب UAE. هذا البرنامج برعاية فينيكس جروب UAE.
And we sat down with Joseph Zolkowski, the CEO of Realm, at the FinTech Summit in Dubai for a conversation about crypto insurance, a very, very important topic. Let's take a look.
Insurance, because of the reasons that we just discussed, always lags behind innovation. But eventually, that lost experience, that data will present itself in the market, and capacity will eventually come around. As you know, we've been underwriting in this space now for 6 years across the entire digital asset ecosystem on a global basis. And so we've been developing a data set that is enabling us to move faster and smarter. And as crypto becomes more mainstream, that data becomes more available, and more capacity will eventually come into market. In any emerging sector, you've got a bunch of early stage companies. Early stage companies lack financial experience, lack successful track record. Many are not profitable yet. You also have regulatory murkiness, right? Or a lack of clarity. And if there's a lack of clarity on a regulatory front, it brings a lot of variability and volatility. You've got an asset class that props up the balance sheets of so many of these companies. And even if they're running a great business, if the asset class itself evaporates, all of a sudden the viability of these companies goes out the window. So when you combine a lack of track record, with a lack of operating experience and maturity and the volatility that comes with the asset class and the regulatory situation, it makes it a challenging underwriting space. And when you think about traditional insurance companies, they're generating so much premium from industries that have all of those things, right? They have credibility, they have track records. So it makes it easy for traditional insurance companies to say no to crypto. If you look at the P&C industry for the last 25 years, only 10 of those years were profitable from an underwriting standpoint, right? Which is to say that, as Warren Buffett has always said, it's about the float, right? Insurance companies traditionally in the P&C space are generating profits off of investment income. When we look at the opportunities to underwrite companies operating in these new and emerging sectors, we've got to make sure that we're underwriting profitable business. And so I think as the ability to underwrite profitably at scale becomes more apparent to the rest of the market, I think that's potentially a tipping point where other companies will become potentially more interested and start to see a potential return on that capital. The idea of putting insurance buyer directly with insurance provider, and insurance should work that way, but as a global industry with a $6 trillion market cap, it's heavily intermediated, and insurance capacity is kind of the tail wagging the dog. So I think it makes sense. I think will eventually happen, but it's still kind of slow to gain traction, largely because there's not a whole lot of regulation around it.
That was a great interview with Joseph Jolkowski, the CEO of Realm. But that wasn't all. We also caught up with Alex Manson, the CEO of SC Ventures, for another insightful interview on the future of crypto investments. Let's watch.
We have three broad themes, right? Digital banking and lifestyle for retail customers, integrate financial services in people's lives as they want it. On the corporate side is supply chains, world trade, SMEs, and all we're doing in the commerce, online commerce, and generally speaking, supply chain space. And then across the board, I'd say, because over time we'll move to a financial system which is handled on completely different rails, digital assets. Not saying Bitcoin's going up or down. I'm saying Bitcoin's here to stay, and so are stable coins, and so are other tokenized instruments. And so handling this infrastructure is absolutely key. Now, you may ask me, AI, sustainability, oh, absolutely. It's an integral part of everything I've just spoken about. It's not a theme per se, it's a foundational technology, and we employ it in every one of these things. But the biggest challenge is it was a very lonely journey until recently, where digital assets adoption was occurring in a bit of a wild west with early adopters, people doing very interesting things, market caps going up, and very successful companies, but ultimately not at institutional or bank grade. No regulatory framework either, and so people were very scared of it. And so there was an element of evolving from that early adopter stage, and I hate to see early adopters get hurt, but this did happen, and there was an element of that being predictable, into a more institutionalized digital assets industry. And the conviction again is it's here to stay. But in order for it to be institutionally adopted, it takes the right kind of infrastructure at scale, robust, safe, trustworthy. You could say bank grade, and that's what we set out to build. That has been very challenging because initially people didn't see it that way, and it's evolved into an industry which is increasingly converging or institutionalizing in the right sort of ways, but we're still early days. We deploy capital in people we work with. We would only do that with people we work with, and that's all right, because we're not A16Z, Sequoia, they're doing a great job. We'll never have the same information flow. What we do have is a bit of an edge in using the product or capability and partnering with them, these ventures, in the context of building our own ventures, and so it becomes an ecosystem. In other words, when we find a great capability, which we didn't build, but it's great and it works, and so we don't have to build it, well, we'll partner up, and at times it makes sense to invest. Sometimes it doesn't, and that's okay as well. But we'll partner with many people, and we do this all the time. You may have noticed, some of the investments we made in the region. The Tungsten is an example in the global. In the custody space, and obviously others. The valuations really interesting there. We've had a period of ever increasing multiples, ever increasing valuations. The reality is the investment cycle is in normal times going through a cycle 8 to 10 years. The building cycle is 10 to 15 years, and so an element of patience, an element of it takes time. A venture, a company has to pivot 3, 5, 10 times before we know we're onto something and we can scale it. And that discipline in the iteration, in the building process is critical to building successful, viable companies. And so valuations right now reflect a bit of that, right? End of life fund, people's sort of stuck at times with companies and not wanting to do a down round. And I think it's a bit of an advantage for us, having been perhaps a little more reasonable in terms of our expectations, and also in terms of our expectations as to the time horizon that it takes to create a commercially viable company at scale.
Stablecoins. It seems that's all we're hearing these days in the crypto ecosystem. But you may be wondering what is really driving the incredible growth of stablecoin in the interest on the topic. Well, that's a big, perfect topic for the educational segment today. You may be wondering what is driving the incredible growth of stablecoins. Well, there are a couple reasons behind this really surge of interest. First of all, it's the unique features of stablecoins. Stablecoins operate 24/7, they're low cost, and they're instantaneous. From a remittance perspective, day-to-day usage, this is a big differentiator with traditional banking transfers. Second is the media coverage and the familiarity with the asset class as well. The recent IPO of Circle, for example, brought even institutional interest on the topic, and this has been a big driver of the overall interest on the topic. Increased overall adoption of digital assets as well. Today, depending on the source of data you look at, there's anywhere from 300 to 500 million people around the world using digital assets, and a big percentage of that are stablecoins. And of course, regulatory clarity plays a big role in this topic as well. From the Genius Act in the US to other similar pieces of legislation around the world, this is enabling stablecoins to enter the mainstream financial ecosystem. And talking about mainstream, we have always challenges with banks. And not only we're seeing now stablecoins being used in the remittance and the small retail payments, but at the B2B sector as well. For example, almost half of the Tether USDT transfers on Ethereum are over $1 million of transfer of assets. This shows you that actually a lot of the companies are using these stablecoins to make these transactions. And the data proves it as well. When you look at the growth of stablecoins, it is quite surprising. At the beginning of COVID, there was less than $5 billion in stablecoins. And right now, we're almost at $250 billion in assets in stablecoins. This is a tremendous growth and opens the debate whether stablecoins are really the tool that is bringing all these millions of people in the digital assets ecosystem. Well, hope you enjoyed this episode of Crypto Weekly, and see you all next week for another episode of Crypto Weekly and the exciting developments in the crypto space.
هذا البرنامج برعاية فينيكس جروب UAE.